Hey, I'm back. I just wanted to give you a little quick slide in which we recapped the two categories of fixed costs and variable costs. These are all the examples, the most common examples, and especially I took them from the specification, so like they are the ones that you need to kind of know. So as fixed costs, we've got things like rent, loan repayments, insurance, advertising, salaries, utilities, software, and IT services. And for variable costs, on the other hand, we have raw materials, components, stock, and packaging. If you don't remember these, have a look at the previous videos that I did about costs, please. Okay, so moving swiftly on. Oh, no, we'll look at this later. So what is revenue again? Do you remember what this term refers to? Revenue is income coming into a business from the sale of goods and services. So it's literally just the money that we're making from selling stuff, okay? And it is calculated by identifying the quantity sold, okay? So the number of burgers, we said it was 10 times the selling price, okay, which was in that scenario there 3, and that's us with our revenue, okay? So it's a very simple, easy formula. Oh, what happened? Sorry, girls. Sorry. Okay, so what we need to do now is you need to pick one of these businesses or our school and list all the costs that you think they might encounter and all the revenues you reckon they might make from their sales, okay, or from the service they provide. So if you could do this by yourselves, we're not going to do it now. We're not going to, I'm not going to give you any of the answers in this video, so we're just going to discuss it again in our webinar, so we can literally look at this and chat about it when we're all together on Teams. Okay, so please spend a minute doing this exercise with 1 or 2 even. If you want to be extra good students, you can choose more than 1 if you like, and just do this in your books and that's it. Okay, now what do you think is meant by the term profit? Profit is the money left over from revenue once the costs of operating the business have been paid. Okay, so what exactly does that mean? Please write down this definition, by the way. Literally, all this means is that the profit is found by identifying the total revenue and subtracting from that total revenue the total costs, and we're left with the profits. Okay, so money that we are left with once we take into account the costs of the business that the business needs to pay for. Okay, so here I've got a little really quick example for you to kind of have a look at. If I buy a box of chocolate bars for £30, God, that'd be quite expensive, but box of chocolates, I just kind of was thinking about something fancy, and I sold them for £50, okay, my profit would be in total £50 minus 30 that I've bought the box for, therefore I'm left with 20, okay? So if I am buying something for that much money and I sell it for a higher price, I'm going to be left with something, and that something is going to be my profit. It's as simple as that. Okay, so very simply, why is it important for businesses to make profits? I mean, these are really 3 intuitive examples that I've got here just to get you kind of thinking. Again, write this down in your books. One of the reasons is to buy new equipment and buildings. So for businesses to kind of have a base where they can carry out their activities and to have proper equipment or machinery and stuff like that. To pay the workers higher salaries for ensuring that they are satisfied with their work, life, whatever, and they're carrying out proper jobs. They're doing their job very well, so they're motivated. And another example could be to develop new products and services. Okay, so let me carry on. Right, this is literally almost the end of the lesson, so what I'd like you to do is finish off with this task here. Okay, so practice profit calculations. Very simple stuff. Okay, so if you could just stop the video and have a look at these questions 1, 2, 3, and 4. Okay, now please, once you've stopped and done that, the answers are here. Okay, so I'm just going to go through the first 2. Weekly sales from DVDs is £15,000. The cost of buying these DVDs is £8,000. How am I going to find my my profit? I'm just going to have to calculate. I'm going to have to subtract from my revenue. My revenue is £15,000. My costs, which is £8,000, and I'm left with this as my revenue, £7,000. Okay, now shall I just do, no, I'll do number 4. Okay, so last term, a school sold 20 electronic calculators for £4.50 each. The cost of buying each calculator was 3.85. How do we find our profits? What we need to do is, first of all, we've got to calculate the revenue, which is 20 times 4, so 20 electronic calculators, so 20 units times the cost per unit, so 20 times 4.50. And once we find that out, we subtract from there 3.85 times 20. Okay, so my total variable cost, and I'm left with £13. That is literally it. I hope this was clear. And I'm really sorry for doing this so late. I know that you normally probably don't do much in the afternoon, so make sure that you're doing this tomorrow or something. Or if you want to do it this afternoon, that's even better. And really, really well done if you've literally went through these both the videos. That's really impressive if you have. I know they're kind of heavy. And I am really looking forward to talking to you guys next week. And I hope you're all well. And yeah. Speak to you soon then. Bye.